Why you suck at trading. So, the reason why I thought of this being a very good culmination of all these workshops is we talked about market structure, we talked about liquidity, we talked about data, we talked about how to view price from a statistical standpoint, we talked about my risk management, we talked about how I get in and out of trades, my psychology on how I use these trades for my advantage, how I operate on drawdown, all that stuff, right? The discipline, the psychology, and the consistency, which you see up here on my chart, which is the forefront of everything that I do when it comes to trading. But I wanted to bring up some pinpoint problems that are very common in the trading space and something that I've created months and months ago, actually about a year now, inspired by Mark Douglas. Again, I'm not going to take credit for it. We'll get into that here in a little bit, though. But I kind of put my own twist on it. So shout out to Mark Douglas. Everyone probably knows who Mark Douglas is. If you haven't, just go Google his name. I did not make the concept up as far as the data, but I have created the concept from kind of making it fun and creative. So when it comes to the reason why you suck and why this is so important is because when it comes to trading, you have to acknowledge your problems. That's the first step of anything, right? If go through look through the addiction stuff, right? What's the first step of beating addiction, right? Understanding you got a problem, acknowledging that you have a problem. It's the same thing with trading. It's the same thing with being a business owner. Same thing with being a bad friend, whatever, right? You have to acknowledge you have a problem so that way you can then put a face to the problem and understand the trigger. It's the same way with when I tell you all to journal your trades and journal your psychology, because if you're just journaling your performance, but you're not journaling your psychology, as unsexy as that sounds, how are you going to put a name to the emotional trigger that's causing you to be emotional on the charts? If you're always asking yourself, I don't know why I'm FOMOing, I don't know why I'm overtrading, I don't know why I'm doing this, you're going to keep asking yourself why if you're not journaling it and writing it down. Because your mind and you putting this on the charts, it's just an experiment. And if you were a scientist in a lab doing an experiment, how crazy would it be for you to be a scientist and not document down a single finding that you do through every study that you do? If you have a control and a few experiments, right, you're going to document that stuff to see the changes and see the differences. So it's the same thing as trading. If you're not doing the unsexy, boring work, do you think that you're going to get the sexy results from the unsexy work? Absolutely not. Everyone wants to go straight to the sexy. So in this video and in this live session for all of you here, you need to understand why you suck at trading. You need to look at yourself in the mirror today, look in yourself in the mirror while listening to this recording, and really just put your ego aside and listen to this. Watch this all the way through. Take notes if you have to. If you have any questions at all, please drop them in the live chat. If you're watching the recording in this, drop it in the comments. So let's move into some main reasons. Now, obviously there's tons and tons and tons, right? But if we kind of build up all of the main reasons into a few common ones, I think everyone can relate to this. And the biggest one being ego. I sat and thought as I was planning this workshop out, what is like if I could just list everything, what's the one main thing that this all culminates to? And I believe it's ego, right? Because you'd be like, well, Austin, no, it's money. People want to make money. Yes, but why do people want to make money? It's for their ego. They want to feel good. They want to flex it to their friends, their family, their significant other. They want to flex it on social media. They want to feel good about themselves. Maybe you're not a person that wants to flex on social media, but maybe you just want to feel good about yourself. That's still your ego. That's still you making an ego-based decision because you want to make yourself feel good. So in this ego, when people start in their trading journeys, the first thing that they usually get exposed to in terms of education, that usually creates a bias, right? Just like how when you're a child, when you're growing up, you can't pick your parents, right? So if your parents are exposing you to bad things, you as a child you don't really know a difference. You just have a bias, right? That's just how the world works. But as you get older and you learn more about the world, then you know if how you were raised and all that stuff kind of is good or bad. Like you can start thinking for yourself. But as you're a child growing up, you have a bias. So you growing up in the world of trading, you're a little baby, right? You're a little kid, and you're being exposed to this one model of trading or this one method of thinking, and now your entire experience is you thinking that the market is this way and the only way to view the markets, and it's just not clicking with your brain. It's the same concept of if you learn to drive a vehicle, but you're told you can only drive Ford trucks, right? And you just, in your brain, you just hate driving trucks, right? There's a reason why there's trucks, SUVs, cars, motorcycles, because people's brains are wired differently, and some of us just enjoy cars while some of us enjoy SUVs, right? You're not bad for driving one or the other. It's just how you're wired in your brain. So when it comes to trading, it's the same way, right? Like, it would be crazy if I told you the only way to get from point A to point B is to drive a truck, and a Ford truck specifically. It'd be crazy for me to tell you that the only way to trade is this. But when there's objectively hundreds of ways to trade, if that market's moving, there's a model that's working, and then there's a model that's not working, and then in that other move, there's another model that's working. There's hundreds of models that are working, and with the right risk management, you can capitalize on the movements. So one major reason I think a lot of new traders and just continuously failing traders suck at trading is their ego because of their bias. Next one, social media. Social media it can be one of the best things of your journey, and it can also be one of the worst, because you see all of these people on social media flexing all these bullcrap profits. I don't have to go through the explanation. Everyone here knows and has probably 10 social media accounts that they can think of right off the top of their head when I even mention the word social media in the negative aspect of trading. And you know the people that you can think about, right? All the people that's flexing all this stuff, they seem like they're always winning. They never take losses. They never show them trading and taking losses, all that stuff, right? So then it builds a psychological thing into your brain, thinking that if you take a loss, you're a failure. If you're taking a red day, you're a failure. If your setup didn't present that day, but this person's did, you're a failure. You took a short, oh my God, I took a long, dude, you're a failure. Like, all that stuff, right? You could be sticking 100% to a model and just statistically be okay with taking a loss that day, but because of social media and because you've seen your friends making wins, right, or the people you look up to, they took a win and they were on the opposite side of you, you may feel really bad about yourself. You have to understand that this is a game that you need to stick very specific to your journey. It would be so goofy to play a video game and then looking over and watching your friend play the video game and being upset that you're not at that level, and if you just keep on focusing on your friend, you're going to magically get there. No, you need to focus on your video game, right? Your friend is on level 12, you're on level 1. It doesn't matter what you do on level 12 if you're still on level 1. You need to focus on getting to level 2 instead of to level 13. And that's exactly why social media sometimes can really create this hyper unrealistic environment of what trading can really look like, because they just see, oh yeah, this and this and this. But if they are actually being genuine, you don't know the amount of hours that they put in to get that result. If they're being fake, you don't know that if they're being fake or not, right? So you're seeing the good side, and that's it, because that's what social media is for. Just to highlight the best parts of your life, and that's what most people do. They don't really show a lot of the old stuff. That's why I always show you all every single one of my trades. I stream all the time. I am 100% okay showing losses, because that's a part of the game, and they're not even really losses, and we're going to get into that in a bit. You think you know XYZ. This is so common in trading. So common in trading. You see people sucking at their trading, right? Everyone knows. Let me know in the chat if you agree with this. If you've seen this, if you believe this, maybe you've been a culprit yourself. Just be honest. You see people unprofitable at trading, and they're killing themselves trying to trade a trading strategy, yet they'll defend it till the day they die. Y'all seen that happen, right? You take a loss, right? And you're just struggling. You cannot get this concept. You cannot, for the life of you, it's just not clicking. And somebody else takes a short and they're making it look easy. And you're like, wow, you took a short, but then low key, you just lost taking a long and you're still struggling. Like, it's like you just think you know the market, but the market's just against you. Yeah, exactly. Erebos, Roger, that. Everyone's experienced it. Everyone. Because you think you know XYZ. Guys, newsflash. No one knows how the market truly works. Nobody. The market is like religion. We all can have faith. We can all have very high faith, but none of us objectively know what's beyond door A. Right? Like, objectively speaking, I'm a Christian, but none of us know objective. We have not seen it with our own eyes. We can only have faith. It's the same thing with these charts. We just have to be consistent at one faith, at one way of looking at the market. But you think you know this, and the market's doing this. Look at this. The market's definitely doing that. Like, we don't know. None of us know. And then the last one within the ego is just business versus hobby. Everyone does this when they start trading, including myself. We talked about this extensively on episode 1, so I'm not going to go too much into it, but just treating trading like a hobby. You know, not you're wanting to always take trades and do all the flashy stuff, but simply put, you're not willing to do any of the unsexy stuff. Backtesting for hours. Oh, but I have a job. Okay, stay up late. You don't need 8 hours right now. You need to learn something if you want to do it. I guarantee you got free time on the weekends that you're watching Netflix on. I guarantee you're doing something where you could be backtesting, studying the charts, watching videos, being educated in some way, shape, or form. I promise you, if what's the dude, Mark Zuckerberg, if Mark Zuckerberg can own Facebook and also learn how to do mixed martial arts, I promise you, you have a spare 30 minutes every single day to study the charts. There is nobody out there. I have people in my pack trade group. They're service members, active duty military service members. I have truck drivers. I have business owners that own multiple businesses. I have people working in the oil fields. I have people doing everything. I have a diverse set of people in the pack trade group, and they are literally like people that are doing driving work, Ubering, DoorDash, like everything full time. You cannot tell me that you are too busy to learn the charts. You cannot. Anytime someone tells me they're too busy to do that, all I hear, and I'm not trying to be confrontational, aggressive, or anything like that, it would just be disingenuous of me to sugarcoat anything to you, because this can either change your life or it can just keep on dragging it down. And that's it. Every single time someone tells me I don't have time to do it, they just don't have time to really treat this like a business. They just want to treat this as a hobby. And if that's you, that's fine. I'm not telling you have to treat this like a business. Right? If you view the markets as just a fun way to gamble or whatever, and you're making plenty of money everywhere else and you're happy with it, great. But I'm not talking to you. I'm talking to the people that want to treat this like a profession. They want to be a professional. They want to treat this like a full-blown business. That's the people I want to appeal to. That's why I don't do clickbaity bullcrap. That's why I don't really get a lot of views in comparison to all these major social media people, is because I just want to give you value and be real with you, not sit here and get clicks and do all this, nonsense. Because you need to treat this like a business. The moment you are like, oh yeah, let me just, I'll take a trade here and there, it's all treating it like a hobby. And everyone knows the answer. Again, you do not have to be a business expert, ladies and gentlemen, to understand what a business versus hobby mindset is. You do not have to be an entrepreneur. You don't have to have a single day of trading. You know deep down inside, if you asked yourself, what does a business person do throughout the day versus a hobbyist? You know exactly. Just ask yourself. We all instinctually know in our minds when you're about to engage in the markets every single day, ask yourself, is this a business decision or a hobby decision? Is this a 90% decision or a 10% decision? Am I about to make a decision that the 90% of the populace is also doing? And if I know that the 90% of the populace is unprofitable, then I need to do what the 10% is doing. I need to do what the minority is doing. If I have knee-jerk reactions in the market, that's probably what 90% of the people are doing too, so I may not want to do that. And then we move into the winning paradox. And I made this one a completely separate box because this is like ego drags people down, but this is everyone's worst nightmare. And everyone goes through it. I don't think I've heard one person that's going through a trading journey trying to be profitable and they have not went through the winning paradox. Everyone does. Everyone struggles with it. Even today. Even I. Everyone still struggles with this. This is not like you're just going to cure this. It's just something you have to deal with and learn to deal with every single day. And the winning paradox is thinking that trading is about winning. Ladies and gentlemen, trading is not about winning. One of the best books I've ever read, I listen to audiobooks, so I never actually read it, is by Tom Hogarth, Best Loser Wins. You don't even need to go buy the book. Go listen to the synopsis on YouTube. It's free. The best traders in this world are just the best losers. I know how to lose. If I take a losing trade, I take it on the chin and move to the next day. I don't overtrade. If I take a win and I extract value from the market, I have a max daily threshold. I give myself a limit and I'm done for the day. Right? I take the wins and I go home. I don't act like an addict on these charts trying to click that button 20 times to put my business more at risk, because every time I click that button to engage in the markets, I'm exchanging risk. So I'm increasing my risk as a business every single time I click that button with zero data to back up my decision, right? I'm not saying if you take 100 trades a day, you're a bad trader. I'm saying if you take one trade a day that doesn't have a piece of data backing up that decision, that is a bad trade. Because a lot of people get that misconstrued too, thinking, I mean, if you're taking 200 or 100 or 50 trades a day, no. Every model's different, man. Every model has different trade frequencies. There's no perfect model. There's no, you only need 2 trades a day or 1 trade a day or 10 trades a day or every model's different. But they all need to be backed up by data. And they all need to be a business decision, not a hobby decision. So the winning paradox is people, you're stressed in trades because why are you stressed about the trade? Because you want to win. Because we as human beings, as all the way down to our childhood ages, we've all been to believe that and raised to believe that winning is the right answer all the time. In most situations, you're correct, right? You get into the car, you have to win, or you're going to die or get into a car accident, right? Like, you have to be correct to get from point A to point B. You have to be correct to ride a bicycle. Yeah, there's a lot of things we have to be correct about. And we go throughout our whole daily lives having to be correct. You know, if I get the toothbrush, I don't want to put mayonnaise on my toothbrush. I need to be correct at grabbing the right instrument and then putting toothpaste on it. I got to, it's programmed into our brains to be correct about all of our functions as a human being so we survive and maintain and thrive. So in the markets, one of the reasons that causes so many people to struggle is they don't understand and acknowledge the fact that we've been raised in our human conditioning to win all the time and associate that with survival. Associate that with, if we're not winning, we're dying. You know, and even throughout our academic careers, everyone in here is probably from different countries, but it's all probably the same. You got a certain percentage that you have to be correct at, or you're going to fail that test. And usually here in America, when I was going through school, it was a 64%. 64% or below, that's a F, fail. A 64% win rate is amazing in trading. Are you kidding me? You can be profitable with a 50% win rate, 40% win rate with the right risk management. But what was that key word I just said? With the right risk management. So trading is not about winning. It's about managing risk. It's literally just about taking the amount of capital that you have and managing risk. Being in and out of the trades, risking a certain amount per day, risking a certain amount per trade, capturing a certain amount of profits. It's not just about losing money, it's about making money, making sure you make the correct amount of money for the correct amount of risk that you make over the span of 100 trades, all that stuff. It's just about how you manage your risk, because guess what? Somebody with a 40% win rate can be profitable, while somebody else with a 40% win rate can be unprofitable. How do you think, what's the differentiator? Because it's not the win rate. So if it's not the win rate, then why am I focusing on winning? Just like how if we all think of going fast in a car, right? If we think driving is about going fast. No, what causes you to drive fast? Putting my foot on the pedal. Okay, so driving is about pressing the gas and moving the car, right? This is putting your foot on the pedal. Your risk management is either knowing when to let off the gas or when to go full throttle. De-risking or increasing your risk, using data to tell you when you need to do so. Winning is just the after effect of how you manage your risk. When I press down on the gas pedal, that going fast is just an after effect. That's it. That's all it is. It has nothing to do with winning at all. Winning is just a side effect, and I tell my community, my pack trade group this all the time. Winning is just a side effect of how you treat losses. That's it. If you look at a loss every single time as just this devastating event, it's painful, it's putting a knot in your stomach, all that stuff, then all you're doing is you're building into your mind that trading is about winning. So every single time you go into a trade, if you go into the markets with this predisposition to believe that it's all about winning and you take a loss, you're devastated. And when you take a win, you're on cloud 9 when you should just be balanced. Absolutely be proud of yourself when you take a win, but don't let that consume your entire day, just like how when you take a loss, that shouldn't consume your entire day. Right? You should be evenly balanced. We go over that in episode 1 as well, or episode 2 with psychology. Willing to learn from the markets versus make money. When people are focusing on the winning paradox, when they're focusing on winning instead of just managing their risk, you guys miss out on so many learning opportunities every single day that it just breaks my heart. Because every single day, I'm telling, like, that's why trading is so stimulating for us, guys, is because every single day is different. When you go to that 9-to-5 job, I don't care how much you love that job, if you get into the same routine, you get bored. Right? I love the lab. At one point, I loved it, but it got boring very fast. Right? Now, I wasn't passionate about it either, as I am with trading, but you guys still get my point. When we as a human being get into a rut and get into a repetition of doing something, it gets very boring very fast, especially in 2024 when everyone's addicted to dopamine like no other, and we're always wanting those dopamine hits, dopamine hits, dopamine hits. When it comes to trading, we're getting those dopamine hits every day because it's new every day. This pattern, while the markets do move in similar patterns, these candles here, specifically this day, is very unique to this day. Right? It's not like this exact pattern right here and these exact candles print on Thursday at this time. No, it's different every day. And every day has different news and different moments and different events and different reactions, and it's all different. And every day you can take something away from the markets. I have been trading now over 4 years, and I am still learning every single day as a trader. Every day. There is not a moment in time, ladies and gentlemen, where you just wake up one day and there is nothing left to learn. Ask my pack traders. I am constantly learning and studying NASDAQ. Like my life depends on it every single day because I love it. There's nothing more that I enjoy than just watching these candles and seeing how statistics can keep on playing out throughout my life as a trader. And that's what you guys need to be. You need to be obsessed. Obsession is not a bad thing. Don't ever let someone tell you that you're obsessed with something and associate that with being bad. The only people that look down on obsession when it comes to obviously a positive thing like trading is the people that are just insecure because they did not put themselves out on the line like you are. That's it. Don't ever let someone be like, oh, you're obsessed. No, dude. If you want to spend 5, 6, 7 hours a day studying this to understand this and learn this, freaking do it. And then the last one is just low barrier to entry. That's it. Like, one of the reasons why people suck at trading so much is because the barrier to entry is so low that they're sitting here focusing on winning all the time because there's no prerequisite to trade in these markets. You go to school, you want to get a lot of these crazy jobs and all this stuff to make money, you got to go to school for 4 years and then sometimes another 4 years. Right? You want to do this, you got to have a certification. You want to invest in institutional sized investment, well, you got to be an institutional trader, right? Or an institutional investor, accredited investor, I'm sorry. You got to be an accredited investor here in America anyway. So you got to be a millionaire or make so much in the past 18 months combined or all that stuff, right? There's a money requirement. But anybody can trade. Anybody. You can have $5 and go put your last $5 of your entire life savings and you can lose it in the market. Or you can go and trade a demo account, right? Like, anybody can click the button. So when you have a high barrier to entry, so I tell people this all the time, when you have a high barrier to entry, so imagine this little thing, this little rectangle here is the barrier to get into the industry, right? The success or the consistency of that, it's pretty consistent because people that have to leap over this being like an accredited investor, they already got connections, right? They're already making money some other way. Like it's a little bit easier for them. But when you have a low barrier to entry industry like trading, the failure rate increases exponentially compared to something with a high barrier. What about medical school, right? Once people get accepted into medical school, it's a high barrier to entry industry, but once you get accepted, almost everyone makes it through medical school. Why? Because they have already invested. They already gave you the spot. That medical school seat's very expensive. You guys seen the medical school loans for some of these people? That's a very expensive seat, right? They're gonna, if you've already made it that far and you've made the qualifications, the only thing keeping you from becoming a doctor is yourself. Like, it. Go look up the statistics, right? When you get it, the getting in is the hard part. And then it's consistent after that. Getting into trading, low barrier to entry. Failure rate, stupid high. So be very, very cognizant of that. Now, how do we fix this, right? Because we've introduced the problem. We talked about the problem for the past 25 minutes. How you fix this is what I like to call the 8-step trading model. Now, the 8-step trading model is inspired by Mark Douglas. Now, it's inspired by his data and his research. And what he found was that it takes about 8 trades before you create a habit in trading, like a trading habit. Just like how in the real life, in the real world, if somebody wants to actually drop in the chat what the specific statistic is, if someone wants to go to Google real quick, there's a certain amount of, things that you can do to build a habit psychologically. Like so many days, if you do the same thing so many days, you can build a habit, statistically speaking. It's the same thing in trading, but obviously it's not that many. Usually, Mark Douglas found in his research with working with many traders, he found that about 8 trades consistently taken with the same model, same risk management, same profit targets, all that stuff, you start to actually build a layer of good habits in the market. So all I did was I was like, okay, eight things. I'm going to call it the 8-step trading model. And because a figure 8 like a racetrack, right? I have a caveman brain. I got to make things sound funny and interesting because I'm a caveman, all right? So in the 8-step trading model, I tell people if you have a bad trading habit, please look at me in my digital eyes. You have to take yourself serious, okay? Don't do this and then get to like trade 3 and freak out because you're letting, you're actually letting the trade play out, and then you FOMO or close out early or do a bad trading habit, and then you lie to yourself. If you lie to yourself when you're doing these questions and when you go through this, I need you to understand you're just hurting yourself. You are not here to impress anyone. You're here to become a trader. You're here to become a risk manager. So when you go through this, do not be a little crazy emotional person and you get to like trade 2 and you're freaking out. Trade 3, you're freaking, and then you lie to yourself throughout this whole thing. I've seen a lot of people, I've done this class twice already, and I've seen a lot of people go through this and then they're just like, yeah, I keep wanting, like, you got to go through this a few times if you have to, right? But in the 8-step trading model, treat this like a figure 8 race course, okay? All the little, you guys know the figure 8, like NASCAR and all those stuff. So you start here, trade number 1. At every single trade, all the way to the 8th trade, what I want you to do is stick to one strategy. I don't care what it is. It can be how I trade. It can be how freaking lunar cycles trade. You can trade ICT, smart money. I don't care how you trade, okay? This is not a cult. I'm not telling you have to trade pack trading models, okay? But whatever model you choose, stick to it. Now you stick to that model. Name that model. Every single trade. What was the model? Pack trade models. What was the risk? Whatever the model that you choose that creates their risk profile, put it here, right? Every single trade, because every trade you're going to maintain the same risk management. You're not going to change it. You're not going to do anything crazy. You're keeping the same risk. And then you're going to annotate it here. Now, if you do change it, be honest. If you freak out, if you do anything, put it down, because you're documenting this just like you would do a science experiment. How would you believe the science experiment what would be the outcome if you're not sitting there documenting the work and doing it correctly? So the third question is, what was the outcome? Meaning just what was the win or what was the loss, right? So if trade 1 won, trade 2 lost, trade 3 lost, trade 5 won, trade 6 won. Every single one of these, you just put win or loss. What would you have done? Now, this is the most important question out of all 4 questions. And you know the sad reality here, guys, is not everyone's going to do this. I'm telling you, you may get motivated and do one, you may even get motivated and do two, and then people just, nah, I want to go back to my trading. I'm not making money. Guys, obviously do this on a demo account. Do not do this on a prop firm or live capital. Do this on a demo account. Okay, you're here to learn about yourself. If you haven't even done any of this unsexy work, do you think the market is going to give you money? Do you think the market's going to deem you deservable of making a paycheck? Probably not, right? You're here to build a foundation before you even execute a live trade. And this is that foundation. So when you answer this question throughout trades 1 through 8, you have to be honest with yourself. What would you have done? So like let's say you took a trade with the pack trading models today. So we had a pretty interesting trade this morning where here was midnight open, okay? Always retracing for that midnight open out of 10 plus years of data, 65 to 67% of the time, you can pull this indicator up on your chart and see for yourself. I'm not just pulling that out of anywhere. We retraced this midnight open. So we had the first bullish distribution print right here on my chart. Again, this indicator is for pack trading members only, so you can check that link out if you want to join. If you don't, you do not have to trade this way. You do not need this indicator. It does help a lot for me, and I'm only going to show you guys what I use. So I took this long here for 25 points, and I build into my position. I dollar cost average. This is not a single entry position where I'm putting my single day of risk in one trade, putting my stop loss below here. I'm not doing that. I'm building into my position. I'm scaling into it. And then my max daily loss is what you would call a stop loss, right? Like how much am I willing to lose in a single day? And I only got till we didn't even get into any crazy drawdown here because I only did one contract of M and Q. That's it. We're not trading NQ. I'm not trading size, nothing like that. And then I'm scaling into my position with more contracts here. And then we hit my average price goes down. So this was my average price, and then we got 25 points right here. So what happened was when we dollar cost average here, but as this price was going down, ask yourself, if you took a long right here, and actually somebody in the general chat in Discord said they did. They struggled with this drawdown, which is normal. It's fine, but be honest with yourself. He was honest, and I'm really glad they said that in the general chat. So when you take this long and you're going into such drawdown, if you haven't back tested this and seen this happen before, if you're not exposing yourself and studying price, this could have scared you, right? You could have been super worried, super freaking out. You didn't know what your stop loss would be. You didn't know. You'd be crazy. And so maybe you'd close the profit right here and panic sell, panic close. Or maybe you stick to the risk management and you would take both of these and then you see a little bit of green and then you close and panic close. Like, just be honest with yourself when you're asking yourself what you would have done every single trade in this 8-step trading model, and just be honest. Like, would you have FOMO'd? Was there another trade that you wanted to FOMO on as well? Did you want to close out early? Whatever the case may be. And then what you're going to find is you're going to kill 3 birds with one stone, not 2, 3. 1, you're going to do an 8-step trading model where, 1, you are consistently sticking to one model 8 times and you're letting the trade play out. I don't care if this takes 8 days. I don't care if this takes 4 days, a month, 2 weeks, however long it takes your model to create 8 trades. But Austin, I'm not making money in that month. If it takes me a month, I'm not going to make money. You're not here to make money. You know, that's the main problem so many people they deal with when they do this 8-step trading model, or when they're trying to, is they keep thinking in the back of their head, the winning paradox. They keep thinking in the back of their head, I need to win. I need to make money. I'm wasting my time. No, you're not. You're building a skill that is over time going to give you the rewards that you're looking for. But you've got to build a skill first. LeBron James didn't just magically start becoming profitable on the courts, right? Making layups, making free throws, all that stuff. He didn't just magically one day have it. Like, he still worked for it. He was talented, but he still worked for it and really worked hard. Just the same thing you got to do. So when you do all this, you stick to a trading model. You stick to one trade. You let trades play out. You let your risk management play out. Number 2 is you journaled. If you suck at journaling, if you keep telling yourself it's boring, it's cringy, I don't have time to, whatever, insert boring excuse here, you have now journaled 8 times. A little snippet of it, right? You've done it by accident because you had to do the homework assignment. You You wrote down what the model was. You wrote down your risk. You wrote down the outcome of the trade. You wrote down your psychology, what you would have done in the trade. You now wrote down the performance and your psychology in a very small aspect of what you really should be doing. And now you've seen the benefits of what journaling can provide for you. That's number 2. And number 3 is you were able to see very, very distinctively in front of you, is this model actually worth pursuing in the future? Because so many people try to trade models and they can't even determine. Let me know in the chat if anybody here relates to this. When you try a strategy, or when you have tried a strategy in the past and your mind is not even letting the strategy play out because you're in drawdown or you're a little bit of profit, you're freaking out. You can't even see if that strategy is profitable. You don't even know if that strategy is profitable or not because your psychology isn't even letting that model play out on the chart. All right, let's say there's a model today, and let's say you find this sexy strategy somebody on Twitter was sharing and they were going over, and let's say there was a long setup right here. I don't know. I'm just literally shooting off the hip here. And let's say this is your stop loss. Dang, this is a terrible example. Let's go right here. Let's go right here. Say you went long right here. Stop loss was here, and you were shooting for a 1.25. Let's go with that. And you start immediately going into drawdown. And you close right there. You're like, oh my God, I can't take this. I can't stop seeing this red number. I'm closing, and then you miss out on a win. Or let's say you go into drawdown. Oh my God, I'm letting the trade play out. Close. And then you ended up with this type of trade. How many of you here, either listening or if you're watching the replay of this, comment down below who's been there, because everyone has. I've been there, right? And you close that trade because you FOMO'd, because you're trading on emotion, because you're freaking yourself out, and now you didn't even see, if you're just testing this model out in the live markets, you don't even know if that model's profitable because you can't even see the data for yourself. You're not letting the data play out for you. Yep, Normad. Been there so many times. Everyone has. If somebody tells you they've never done it, they're lying to you. Everyone's done it. I've done it. Everyone's done it. So going back to the 8-step trading model, when you knock those 3 birds out with one stone, right? You're trading a model consistently. You have accidentally journaled 8 times, right? And then you see if a model works for you. Is now you're able to see at a psychological level, is this model for me? Like, let's say by trade 5, you were just killing yourself. You're like, dang, I don't know if I actually can trade this because I can't wake up this early because this model has prime setups around this time, and I tried forcing it, and I back tested it, and it was great, but I can't realistically apply this to my personal situation. Or you just can't handle the way maybe you can't handle a 40% win rate. Maybe this strategy is profitable, but you're only going to win 4 out of 10 trades on average. Maybe that just doesn't, as much as you want to accept that there's losses in trading, maybe that's just too aggressive for you. Because there's other models with higher entries or higher win rates, just, lower profit targets. So you got to find that balance. Who are you as a trader? Still acknowledging losses, but how many losses and how frequently can you take those? No Chain's been there. Yep, exactly. Quantum. Hey, what's up, man? Never. Yeah, except for Quantum Wicks. He never does. He just always wins. What's up, man? So, going back and wrapping this entire workshop up, because again, this is one of the most common things, is your ego and that winning paradox. So I thought doing day 4 and ending all this out is, ending this entire workshop week out, is highlighting one specific thing that I see that holds a lot of traders back, because I gave you guys how to read price from a statistical point of view, not having to look at a single top-down analysis, Dixie, VIX, looking at 20 bazillion different convergences and all that stuff, right? Spending 30 minutes just to give a pre-market breakdown. Instead of doing all that, I showed you a way to break down the market like a freaking equation and just being able to see the statistics behind it. I showed you the psychology on how to maintain your mind as you're doing that. I showed you how I personally manage my risk and how I personally trade. And so the last day is I just wanted to show you guys how this works. Like, what is one thing, if I could nail all this down, that is still holding you back? And this is probably what I think it is. And so the last little point was the strategy hopping cure, because we broke down, some common things and the winning paradox. And in my opinion, the cure to hopping strategies is this 8-step trading model, doing this whole thing. Because one, you get to see if a strategy's for you. You get to see the data behind the strategy. And now you're way less inclined to want to hop to another strategy, or because maybe you love it. Maybe you're like, wow, this is actually very doable for me. This is great for my time frame. This is great for my session. This is great for my psychology when it comes to accepting losses versus wins, all that stuff. It kind of comes together. I love watching the volatility of NASDAQ versus how boring Euro USD is, or I love the predictability of the manipulation of oil and natural gas versus having to always second guess the volatility of NASDAQ. Like, assets move very differently. And that can also play a factor on your psychology and would you stick to a model after all this? So if you give this 8-step trading model a try and you give it an honest try, you may find out that the model that's been holding you back for a year may just be the model. And maybe you just need to switch to something else. That's why there's different sized cars. That's where there's different types of clothes, different types of music, because not everyone likes the same thing. And you have to ask yourself, what happens when I'm a millionaire? What happens when I have $100,000 in my trading account? What happens when I do pass 7 funded accounts? Do I still want to be this stressed? Do I still want to be waking up every single morning questioning if my model is going to work because I'm so freaked out over my model, or because I hate my model so much because it makes me look at things and do things that I just genuinely don't have fun doing? You have to ask yourself that, because so many people are stressing themselves out on these charts for no reason, because their ego is the only thing, or they're this model that because they have a bias, because they started into the markets 3 years ago and they seen the height of a certain concept or whatever, and they think that the only way of viewing the markets is that way. And so you're holding yourself back because you just, for the life of you, can't understand how to draw 20 bazillion different terms on the charts and remember them every day and do 5 top-down analyses. You just hate that. You hate doing all that just to take one trade, but you think that that's the only way to view price, right? That could be holding you back. Your psychology could be holding you back. There's so many things. So when you do this 8-step trading model, you learn so much about yourself. You learn so much about you as a person, and then, or as a trader specifically. And then you also learn about the model. You get intimate with the asset. You get intimate with the model that you're trading. And you really get to see, is this something I want to pursue long term? Just like how if you were to build a business, maybe you do a little pilot program to see if there's actually interest in what you're doing, right? Like, what do you see restaurants do sometimes? Get little samples. They go to malls and stuff and they give little samples. And then if a lot of people gets it, maybe they go with that product and they start selling it. If not a lot of people get it and they're throwing a lot of it at the end of the day, maybe there's not a lot of demand for it. It's the same thing you're doing here. You're not going to start and just up and invest millions of dollars into a new product to start selling as a business if you never tested it, if you never even built a target audience or a testing audience. It's the same thing on these charts. A lot of people are building a business and investing $1 million into a product they've never tested into the market before. And so you just drained $1 million, just like how you would blow a funded account or a live account or whatever, or lose a challenge. It is the same concept. So, OJ's a pack trader too, right? And he said, I tried that 8-step model. I got dizzy, then hypnotized. Now I only follow the data-driven models, right? That's, you can't make this up. Thank you so much, OJ, for, I love it when the pack members give feedback, because you guys are really showing the evidence of psychology and how it's so important in trading. So thank you for sharing that. Let me pause this.